Hello friends, how are you? I hope all of you are doing really good. So welcome to Economics of Finance Excellency batch. Okay, so what we have been discussing about in the last lecture, we started with another topic, chapter number 3, that is fiscal functions. So we discussed about that there are scarce resources in the economy, right? The economy, all the resources cannot meet all the demands. This is what we discussed. So what we should be doing? He says that the government intervention is required in such cases. The government plays an important role when it comes to the usability of those scarce resources, that they are usable in the best manner for the welfare of the society, which is very important, right? So this is what we discussed. Then we discussed about the three major functions that we are going to study about. Three major functions. One is the allocation function, that how the resources will be allocated. If it is left to the private players, then obviously there will be misallocation of resources in the economy. So we say the allocation function plays a very important role. Then the next function that we have already discussed this in the last lecture, right? We are not going to go into the details of this. Now the next part is, the next function that we have to study is the redistribution function. In this lecture we are going to complete this chapter, okay, because this is the smallest chapter of economics. Redistribution function. Now it says, over the past few decades there has been tremendous expansion in the economic activities, resulting in increase in the aggregate output and wealth. Obviously there have been an increase in the economic activities, and those activities have led to more of output, more of wealth. But the problem here is that this output and this wealth is concentrated in the hands of few. Everybody is not getting the equal share out of it. That is the major problem here. He says, however, the outcomes of this growth have not been distributed evenly across the households. That means if the wealth is there, the wealth is concentrated in the hands of few, right? The output is there, that is concentrated in the health of you. Everybody is not getting the equal share out of it. The resource redistribution refers to the manner in which the aggregate output and wealth generated in the economy is distributed over its household and residents. Redistribution means that there should be an equal distribution of wealth and the output, so that every household is getting its due share, right? That how it is being distributed, that is being told by this redistribution function. So distributive function is related to the basic question of for whom should an economy produce the goods, because the consumer is God. Consumer is God, right? So it is very important that if a firm is manufacturing the goods, they should know for whom they are manufacturing the goods, right? What is their target segment? That with that there should be no disparity in the sense that if they are manufacturing goods for a particular sector, that sector should be getting those goods, and it should be evenly distributed between that sector. It should not be like very few people are having all the resources and the others are not having the resources. It should not be like that, okay? Then effective demand is determined by the level of income of households, and this in turn determines the distribution of real output among the population. That if the wealth is evenly distributed, then we will be able to know what the households are demanding in reality, right? Because what is happening here, sir, what is happening is that very few households are having all the wealth here, right? When they are having all the wealth, then they are demanding a specific set of goods. What about the remaining goods, sir? What about the remaining goods? And those specific sets which are being demanded by the wealthy people, those are being manufactured more, isn't it? The other people, they are not having this income, and if they are not having this income, how can they demand goods, right? So there should be an even distribution of wealth as well as the output. What is being manufactured, for whom it is being manufactured, it should reach the right audience, and the even distribution should be there. Then we say the need for government intervention. If left to the market, the distribution of income and wealth is likely to be skewed or distorted. That is very much obvious. When we are talking about if left to the market here means if we are just leaving it to the private players, that they do it on their own, depending upon the demand and supply, then obviously the income and wealth will not be evenly distributed. Never it will be. Okay, what are the objectives of government intervention in this case? To achieve the redistribution of income for equitable distribution of societal output among the households. If the income is evenly distributed, only then the output will be evenly distributed. Otherwise, will it be evenly distributed? No, sir. Because few people are having the income, the rest people are not having the income. Those who are not having income, how can they demand the goods? They will not be able to demand the goods, right? Then the output distribution, sir, the output distribution will be unequal because all those who are having the money in hand, in pocket, they will be demanding goods. What about the rest of the people? They will not be demanding the goods. As simple as that, isn't it? To increase the well-being of the members of society suffering from the various deprivations, right? That if a particular section of the society, they are not getting the required output, they are not getting required what they are demanding. So if they have, because they don't have the income, right, they are deprived of their basic rights even. Clear? So there should be this redistribution function, make sure that the income reaches the right people, and accordingly the output, there is an equal distribution of the output in such cases. To provide equality in income, wealth and opportunities, right? Income, wealth and opportunities. The opportunities can be in terms of job opportunities also. To provide the security for the people who have the hardships. Hardships means those who are not getting the jobs, those who are illiterate, those who are not able to study, or during the COVID, we have seen the people suffering the hardships. Many people lost their jobs. Those were the hardships. And this redistribution function makes sure that at least they get some money out of the total wealth. The government is able to provide some money so that they are able to meet their basic necessities. To ensure that everyone enjoys a certain minimum standard of living. Sir, that is the basic right. That is what? That is a basic right, that everyone has the right to live. Everyone has the right to a minimum standard of living, right? So this is what is being ensured by the redistribution function, that the wealth should not be concentrated only in the few hands. If it is, then we should be taking from those hands and distributed among the people who are deprived of it, right? Those who are not getting the basic necessities, they should be getting some money in hand so they are able to spend. That is when the output will be equally distributed. Then he says the efficiency equity conflict. Now there may arise a conflict between the objectives of efficiency and equity, as the government's redistribution policies might interfere with the producer choices and the consumer choices. So the government measures must be achieved by balancing between the efficiency and the equity objectives. Now it is very important, sir. What is efficiency, right? The producer wants to produce something, whereas the consumer is demanding something. So to bring that balance between that, equity is equal distribution, but at the same time, efficiency means that the business should also not be losing their credibility, right? They should also be running efficiently, and at the same time you have to maintain the equity function also. So both these things need to be balanced so that even the businessman is not suffering and even the consumer is not suffering. Consumer is getting what is required, and even the businessman is earning what should he be earning, right? Because they are providing the goods and services. So there needs to be a balance between efficiency. Efficiency means whatever the producers are efficiently manufacturing, right? The government might be demanding something else because the government might be targeting one particular segment, and according to that the government wants the firm to manufacture a particular thing. But for the firm, that is not efficient, that is not feasible to manufacture. So there has to be a balance between the efficiency and the equity of distribution of output and the wealth. So then he says, what are the methods or the various instruments of government intervention, how it is to be done? Tax policies like the progressive taxation of the rich and the reduction of tax incentives. That is what I told you, that if the income is concentrated in the few hands, so what will the government do? The government will try to take that from the rich people, give it to the poor people, and that is what the purpose is. That is what the purpose is here, that taxing the rich and giving the special incentives to the poor or those who are facing the hardships. Providing the free or the subsidized education, for example, the interest rate concessions on the educational loans, right? So this is how they can make sure that the people of the lower strata, the lower segment, they are able to study and make a good living out of that. Supply of essential food grains at the subsidized rate to the below poverty line households. right? That is for the distribution of output. Whatever the output is being manufactured, if that output is being consumed by the wealthy people only, then what will the lower strata of the economy eat? They will have nothing to eat, sir, isn't it? So that is why here the government plays a role. They say, okay, the output is there, but we need to make sure that this output is not concentrated only in the hands of the rich people, right? It should reach the right people here. Clear? It should reach the right people. It should reach the poor people also, below poverty line people also. It should be reaching. Okay, after that he says the transfer payments in the form of pension, unemployment allowances, like we have already discussed about transfer payments, that even during the COVID, when the jobs were not there, the government made sure that people should be getting some incentive, some compensation for the times, right? For the pandemic time, so that they are able to buy the output being manufactured by the firms. At least the basic standard of living should be maintained. So employment reservations can be there, and the preferences to protect the certain segments of the population, that what will happen if the jobs are there. Let's say there are 100 jobs, and the wealthy people, what will they be doing? They will be paying the hefty amounts to secure all the jobs. Then what will happen, sir? What will the lower strata do? What will be the middle class and the lower middle class will be doing, or the lower class will be doing? Sir, they will have no jobs. No jobs means no money. No money means nothing to have in the pocket to buy the output. That means no equal distribution of output and the wealth, right? So what is the role of government here? The government reserves some employment and the preferences, right? That if this is the particular job, if there are 100 vacancies, let's say 40 vacancies should be reserved for this particular category or for this particular area. Other social security measures, like the various schemes for the well-being and the upliftment of the weaker and the backward sections of the society, very, very important that the government from time to time makes some schemes, come out with the various policies which will help in the upliftment of the weaker and the backward sections of the society. So this is the various ways in which the redistribution function is being carried out by the government. What is the basic aim? I have cleared it to you, that whatever the wealth is, whatever the output is, it should not be concentrated in the health of very few people, right? Everybody has the right to live, everybody has the right to earn, everybody has the right to consume, everybody has the right to get the output. So there must be an equal distribution, and if some people are holding the advantage of having more wealth, more output, then they should be taxed. Others who do not have that much of privilege, they should be provided with the incentives or the free food, as the government has been doing from time to time. Clear? So this was the second function, that is the redistribution function. Now we'll move on to the last function, that is the stabilization function. What is the stabilization function? According to Keynes, sir, again Keynes, yes. A market economy does not automatically generate full employment and the price stability, and therefore the government should pursue deliberate stabilization policies. Now what will happen, sir? He says, if the government role is not there, and if everything is left to the market, that means everything is left to the fundamentals of the demand and supply, that even the price stability and even the full employment, everything can be achieved by the fundamentals of demand and supply. That is not possible in an economy. The government has to play a role in the price stabilization. Otherwise, what will happen? Every day the prices of the products will change, and if they are changing so frequently, how will the people be able to save out of their income, or how they will be able to earn get the output? Let's say today I want to have a rice, I have 50 rupees in the pocket. Now the rice price is 20 rupees, right? I can buy it easily, but the next day if the price of this rice moves on to 100 rupees, right? That is what is that? So there is no stabilization. Now will I be able to buy it? I will not be able to buy it. So it is very important that the prices of the things should be stable, right? Full employment. Sir, the government has to ensure the full employment, although practically if we talk about in an economy, the full employment is never a practical scenario, I will say. It should be, that is what I'm saying, it should be, but there will be unemployment always in an economy. Why they are targeting the full employment? Because if there is full employment, then the people will have something to spend, people will have the earnings, Then the redistribution function is there, that whoever will be giving the employment, he will be paying some part out of his income, right, to his employees. So there will be redistribution of wealth. If there is redistribution of wealth, only then the person who is getting the money will be able to buy the output. Okay, the next is need for government intervention. The markets have the limited capacity to prevent and resolve the disruption caused on account of the business cycle, right? So he says that if there is a disruption between the demand and supply, which actually is the markets don't have all the resources, the markets don't have all the power to correct that on their own. If the corrective actions are not taken by the government, the instabilities in the form of recession, inflation are likely to be prolonged for the longer periods, resulting in hardships, especially to the weaker section of the society. So if everything is left to the realm of the market, that everything can be corrected by the demand and supply, that is not possible. In that case, the situations like the inflation, recession, etc., they will prolong longer than they should be, right? Longer than they should be. So the government, intervention here plays a very important role. Objectives of the government intervention. Why this government intervention is required? The broad objective is to eliminate the macroeconomic fluctuations arising from the suboptimal allocation of resources. That at the broader level, at the economic level, if there is, non-optimal allocation of resources, which actually is in most of the cases, the government needs to correct those actions. The function is concerned with the performance of the aggregate economy in terms of labor, employment and capital utilization, overall output and income, general price levels, balance of international payments and the rate of economic growth. So these are the various factors which the government needs to work upon, that there should be a full employment. By full employment, only then that person can buy something, the redistribution function will work, and if the redistribution function will work, the allocation function will work, that the resources are being allocated in the right way. Price level means the stabilization in the prices, overall output and income, they need to keep a check, right? So these are the objectives. Now the scope of government intervention. The scope is, what is the scope of government intervention? In case of the scope, it says the stabilization intervention by the government is done through monetary policy to regulate the size of money supply and the interest rates in the economy, which will have an impact on the consumption, investment and the prices. The government tries to restrict or expand the money flow as per the requirement, right? Let's say I have lots and lots of money to spend, but the government doesn't want me to spend. What will government do? I want to take a loan, the government will increase the interest rates. Why? Because they say if you are the only wealthy person, if you will be spending everything, what will others have? Right? If you are going to have everything, what will others have? The others will not have anything, isn't it? The government want me to get less of money. The government will increase the taxes, right? Government will increase the interest rates. Let's say I want to buy a car, right? To buy that car, I want to take a loan. The government will say, okay, pay 30% interest on that loan. Why? Because they want that I should be having less of money, and whatever the money I am having, it should be distributed equally among the people, right? Then is the fiscal policy to direct the actions of the individuals and the firms. The fiscal policy is the fiscal actions, like the taxation is there, interest rates is there, all those things, right? Such policies have both the macro and the microeconomic impact. The challenge before any government is how to design its budgetary policy so that the pursuit of one goal does not jeopardize the other. Say what they are saying is that, say, this is the biggest challenge for the government, that whatever the budgetary policy they want to make, what should be that the one role should not be demoralizing the other role. Jeopardizing means they should not be negatively impacting the other part of it, right? So this is how the budgetary policies need to be created. Now, the last part is the methods or the instruments of government intervention. Expansionary fiscal policy. During the recession, the government increases its expenditure or reduce the taxes to boost the aggregate demand, with the people having more money in hand to spend. Now, during the recession, what will the government be doing? The government will ask the people who are having the money to spend more. How will that be happening? They will say reduce the taxes, let them have more money for the expenditure, let that circle move, let the circular flow of income move. So reduce the taxes, or the government will increase its expenditure. How, sir? The government will say we will make more buildings, we will make more flyovers and all those things. What will happen? That will give the employment to a lot of people, right? If the more and more people will have employment, they will have more money in hand to spend, and with that more money they can consume the output. Clear? Contractionary fiscal policy. Now this is the reverse of expansionary fiscal policy. With the expansionary fiscal policy, what will happen? During the inflation, that is during the increased prices, the government cuts down its expenditure and raises the taxes, right? So that the aggregate demand is controlled with the people having the less money in hand. People should be having less money during that. People should not be spending more, because if the people will be spending more and more, the prices will keep on increasing. So the government says people should not be spending more, they should be spending less. If the demand will come down, the prices will come down. Then the deficit budget. What is deficit budget? Are expected to stimulate the economic activity. All of you must have listened to the budget, right? That comes in the month of February. All of us as the professionals, as chartered accountants, we should be listening to the budget. So what is a deficit budget? The deficit budget is when the government says we'll be doing more expenditure than earning the revenue. Government says we want this economy to flourish, we want to boost the economic activities. So for that, we will be spending more on the economy than earning the from the economy. And on the other hand, there is a surplus budget also. What is the surplus budget? Sir, surplus budget are considered to slow down the economic activity. That is, the government expenditure is less than the government revenue. When the government feels that the economy is in a good state, right, there is not much requirement of too much of expenditure into the economy is doing good, right? At that case, the government says let's earn something now, right? Let's have the government revenue which is more than the expenditure. It is not like that this expenditure is going to be zero. No, this expenditure can never be zero. The government expenditure will always be there. But in case of an economy which is already going at a very good pace, right? Let's say there is a developed economy. In that case, the government revenue will be more than expenditure. Now, if you talk about this deficit budget in most of the underdeveloped nations, you will find the deficit budgets. You may, right? It is not that every economy will be having that, but yes, the slowdown economies which are already going very slow, every government's motive is to boost the economic activity so that the economy doesn't go into the recessionary phase. Then the surplus budget, mostly developed countries, if you developed economies, if you talk about, they will be having the surplus budget. Their overall economy is otherwise going very, very good, right? So they will be having the surplus budget. So these are the three major functions of the government. One is the resource allocation, another is the distribution of income and wealth, then third is the stabilization function, that there should be the stability in the prices, there should be stability in the terms of employment, overall stability in the economy is required, sir, right? So with this, what has happened is, with this our chapter, this particular chapter is over. In the next fiscal functions and overview, right, this is over. Now in the next lecture we'll be starting with our next chapter, that is market failure, which is related to this chapter number 3. Again, one of the good chapters, very interesting topics, in this chapter, very, very interesting topics. But you will feel it interesting if you will read it from this book. If you are going to read it from the ICAI material, then obviously you will feel it complicated, but we have really simplified the things, right? So all those who want to order, they can order it right now from our website, that is www.ksjteaching.org. And guys who are new to the channel, please do not forget to subscribe to the channel and also press the bell icon and share with all your friends, right? So in the next lecture, the new chapter we are going to start with. See you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.